Joining me now is Andrew Whiting, Vice President for the Government Markets at Lincoln Financial. Andrew, great to have you here on the show today.
Thanks for having me, Jeff.
So we're live today in Indianapolis, Indiana. It's the annual NAGDA conference. Why don't you talk about the importance of NAGDA and the importance of governmental defined contribution plans?
Great. It's great to be here. NAGDA is a great conference. It's great for record keepers, consultants, and plan sponsors to get together and put our thoughts together and come up with, talk about the new trends in the marketplace, as well as what we're seeing out there. It's a great time to, discuss the, various changes and keep up with the marketplace and make sure that we're all on our toes and delivering the best possible solutions, whether you're a plan sponsor, a consultant, or a record keeper.
Rather than just being a networking event, it really is a comprehensive sharing of ideas and best practices.
It is, and more so than any other conference, the collaboration is tremendous. I've met many colleagues that are at other firms. I call throughout the year. We have, NAGDA has the industry roundtable, which is always a great time for us to get together.
We can't lose sight of the bigger picture, and that is really a multi-leg stool for retirement, and that is the public defined benefit system, Social Security, and defined contribution. Can you talk a little bit about how your organization kind of brings that all together on behalf of plan sponsors?
Yes, we take a look at all of those legs of the stools and really provide solutions for the plan sponsors, whether it's a total retirement solution or we're just focusing in on one area, whether it's the 457 or 401A or whatever the case may be. But it's important for us to be able to be nimble.
In terms of fees, where does that kind of fit in the priority? Is that, would you say second or third or even lower? If so, what comes before that in terms of priority for the committees you're working with?
I'd say the top three things that we're seeing right now are fees, participant services and the engagement around the participants, as well as the last thing that, it always comes up is the stable value asset class. That is always still something that, because, if you look at most of the government plans, we see anywhere from 30 to 60% of the assets sitting in that one asset class. And plan sponsors have become handcuffed to one investment option.
Mm-hmm. And annuitization is a topic of great interest. Every time you read a survey, you read a popular press article, we're talking about annuities, and participants who have been in the defined benefit system typically like that guaranteed income. How prevalent is that in your conversations with employers and participants, or at least your organization's conversations with participants?
It does come up a lot, obviously depending on the location, the state, whether, it's allowed with the rules and regs of that state, but it does come up. We do a lot of work with law enforcement and the various fire unions around the countries, and, that is a big topic because, like you said, they're so used to that DB portion and having that lifetime income. And, if you look, a lot of the police officers I work with, they'll have an app on their phone and they'll tell you right down to the minute of when they're retiring, and whether it's 15, 20, 30 years from now, but they'll tell you exactly the day they're retiring and they'll know what they're going to have in their retirement. So that's why, that DB, it's a conservative population, but the 457 plans are becoming so much more important now because that is that third leg. It's an important leg of your retirement.
From an RFP perspective, you just want to know, as a potential bidder, that you're going to get a fair shake.
Yes.
Meaning, you're going to get the information you need by which to make a decision and formulate a proposal, and it should be the same information given to everyone to make the same proposal and put the same proposal in. Correct? I mean, you're just looking for an even playing field, and that's
Correct.
what an intermediary like a consultant advisor can bring to the table.
Yes, and the consultant advisor can also kind of translate what we're all proposing, because we have different ways of pricing plans and, making sure they're comparing apples to apples, which is key. At the end of the day, it's exciting when it goes out for an RFP process, and yes, we want a fair shake at it, and of course we want to win the business, but we can walk away saying that the right thing was done for that plan sponsor.
We're facing a rising rate environment. We've had a lot of market volatility with China, Greece, over the last several weeks and months. Looks like we're going to continue to have market volatility. Are you hearing anything from your call center in terms of themes? Are participants learning from 2008? Are they staying put and they just continue to invest, knowing that compounding at the long market cycle and taking a long-term perspective is going to benefit them?
Yes, and now I think a lot of firms are preparing themselves for when the market, takes a little bit of a turn. Our call center has been prepping, and they have materials and information to get out to participants when they do call in, so they don't hit the panic button.